today's video, I'm going to be recapping the Chinese GDP event from yesterday. I'm also going to have a quick look at Brexit and the watered down bill. From there, we're going to move into some technical analysis on the NAS 100. Hello and welcome to an acysecurities Hot Topics video. My name is Alistair Schultz. I'm going to be your host through today's trading journey. The first thing I'm looking at today is giving a bit of a recap about Chinese GDP figures that we saw yesterday for the third quarter. I feel that they are important to note considering they are the world's second largest economy and Asia's largest economy at the moment. Now, GDP expanded by 4.9% year over year. So in terms of the numbers, that actually missed the mark on what their expectations were of 5.5%. But it's worth noting and keeping in mind that last time we saw this sort of number, we saw their numbers hit last quarter at 3.2%. So it is still a long way ahead of where they were in the last quarter. Now, forecasts at this point in time are suggesting that by the end of this year, they'll be reaching 5.1% growth for the year of 2020, which makes them probably one of the only economies on the planet that is seeing growth in full scale that's going to be actually useful to them in the next year. Now, interestingly, I did note yesterday as well about how industrial production is really powering their growth forward. We've been able to see it working quite well. Now, in addition to that, it's getting to the point now where it's slowly starting to trickle into consumption and consumer spending. So those are the sort of signs you want to see when an economy is recovering and, of course, growing as well. It means the stimulus money is, in fact, working. On the whole, the industrial production side jumped ahead by 6.9%. So that they have some very big figures. In fact, it is the highest number this year, and it is on par with numbers in December last year before the pandemic came in. Now, having a look at what's going on in the Brexit scenario, earlier this week we've been looking at this going, okay, we're not going to be getting a Brexit deal. They are going to be walking away with WTO trade terms. Now, what it's looking like is that they are going to try and water down the Brexit bill that Boris Johnson penned not that long ago. That was a law-breaking bill because of an agreement that was earlier signed on North Island. Now, this is really the last chance that they have to delay, because once we get to December 31st, that's it. If there's no deal, there's no deal, and there's going to be WTO trade terms coming in. Now, in terms of a timeline, I've been thinking about this pretty hard. The first part is that I think that by the end of October, they're going to want to see a deal signed so that they can have it implemented by December 31st. If it's not done by then it means there's going to be some level of delay, or perhaps they'll have to revert to WTO trade terms for the interim period until all of the deals are in place, businesses have been able to adjust their prices, and the latter. Now, looking at what we've got next after that, there are two meetings for the European Union Parliament to get together. Now, if we haven't seen a meeting go together by the 23rd, 26th of November with a deal, then the chances of us getting one before December 31st and a proper tearaway are unlikely. Of course, there's also a December 10 and 11 one. If there's no deal, at that point, it is going to get very, very messy for a divorce court, basically. Now, I would expect that if they don't have a deal by this December date, then we can guarantee that by December 31st, they will be walking away with those WTO terms, and it is going to get very, very messy for the time forward, including in our markets. Now, so far today, what we've seen from this news about them watering down the existing bill and perhaps redacting some of the areas on Northern Ireland that they've got in there, which could have been just entirely a negotiation tactic, put in something illegal that they know they're not going to get past to make it a negotiation point. But that's also, questionable and debatable as to whether that happens. But if they don't get it through, then it means we are going to see some issues with the pound. Today, so far, just on the news that they're going to water it down, the pound has risen because it means that there's going to be more income available and it's going to cost them less in the long run. But we'll have to keep an eye on this situation as it develops. Now, another one for us to look at, US equities had a pretty bad night last night. They've seen less hope coming forward for the stimulus bill after, again, Republicans rejected what was anticipated to possibly be one of the big ones. Now, in this instance, it's starting to look like if we don't see a bill by the end of the US trading session today, we're likely not going to see one before the November 3rd election. And we've already heard from Nancy Pelosi, who basically set this little deadline today, because Today basically marks the last availability for them to be able to get the money out in time to the people before the election. Anything longer than today basically means it will come after the election regardless. So she's basically instructed, from at least what we can gather so far, that if there's nothing comes through today, then she's not going to be negotiating any further until after the November 3rd election. Now, in the chart that you can see behind me, I'm just showing you the NAS 100. This is a 1 hour chart, or the NASDAQ. And what we can see here is actually two head and shoulders patterns that have appeared over the last sort of 6 days. Both of them have reached a 100% mark for their take profits. And we've also got a little bit of a downtrend starting to roll in. So you can actually define this as a downtrend now because we have 4 points of contact. You only need 2, remember. But in this instance, I like to use a little bit extra because it is, of course, on the big tech numbers and the big tech stocks. So it's worthwhile having a little bit of extra confidence in that we do have a bit of a downtrend occurring. Of course, this could all just end up being a retracement, so don't get me wrong. And that's why on the bottom side, where I've got a little bit of a dotted line, instead of it being a solid line, the reason I say that is because it is not quite a trend channel for me just yet. Now, moving on from the idea of the NAS 100, but keeping a tech in mind, IBM posted its revenue returns earnings results sort of yesterday, and they have beaten their expectations. Now, don't get me wrong, IBM hasn't had a really flash last couple of years. Now, they are planning on moving and going all in on their cloud-based services. The last 2 years, they've had either flat earnings or they've been even negative. And that's because they're looking at legacy parts of their business. Those old style where they were producing computers for corporate offices and the like are not doing so well. And that's what we consider when we go legacy infrastructure. So what they're planning to do with that is actually offload it, we heard not too long ago. And so if they are planning to offload it entirely, you can anticipate that they are just going to focus on the cloud services, in which case their competitors are going to be companies like Microsoft and Amazon. But regardless of that, this year so far, their cloud revenue is up 19%. Unfortunately, their stock price is still down 6% across the whole year, sitting at about $125 a share. And if we were to compare that to the side of what we see in the S&P 500, which is up a total of 6% for the year, it is lagging behind. But they do have a lot of these legacy parts of Now, one of those things that did catch my eye in the overnight US equity session was AMC Entertainment Holdings Incorporated. Now, if you're familiar with AMC, they are a theater company. They basically allow you to go and see a movie, and sometimes they produce their own. But in this instance, the reason they caught my eye is because they've had a whopping 28.8% jump in their share price. Now, that means they're at $3.88. So it's not a big share, but it's still a very big jump. The reason for the rise is because we've heard from New York's governor that they're going to allow theaters to open again. In a limited capacity, though. So that means that they're going to be able to open theaters and they're going to be able to run at approximately 25% of their max. Now, of course, the jump is a good thing, but it means a little bit more than I think it does. I think it is a little bit over the top for what this value stock is. In reality, they're down 58% for the year in 2020. They're not going to be able to run at 100% capacity at all because obviously they've got restrictions. They're not going to open every theater, and they're not going to be able to seat full seating. It's going to be 25% of their seating available. So that's not going to generate them huge profits overnight. The other question is there's not a great deal of movies being released because of the likes of James Bond wanting to delay it until they can actually get a real proper release and get the income that they want to get from it. So that means they are going to have limited showings as well. So that does dampen the side effects of the share price just a little bit in my book. So definitely something to consider if you are investing in AMC. And of course, if you are considering looking at it, then definitely do a little bit more research into the situation in New York and perhaps across the rest of America where you don't have a lot of theaters open. Now, looking at the news ahead of today, we have RBA monetary policy minutes at 11:30 Australian Eastern Standard Time. We're likely looking at these pretty closely today because we want to know what's happening in the next month. Are we getting a rate cut? Are we getting any adjustments to lending policies? Are we going to be seeing any changes at all? And because we have been looking so closely at this and there has been discussion of negative rates and cutting to 0.10, it is worth having a look at, particularly if you trade the Australian dollar or the ASX, of course. Now, outside of that, we don't have a great deal of high impact news. The ones that I can see on there that I think are going to give us a little bit of action tonight would be coming from US building permits. And we also have 2 FOMC members, Williams and Quarles, speaking in the US session. So keep an eye on those throughout the trading day. Of course, always check your economic calendar to make sure you're not going to get adversely affected by something, or if you're going to look for somewhere to trade. Now, if you do want to get in contact with me, please feel free to shoot me an email at talk2al@acy.com. And don't forget to like and subscribe to this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.